Dear students and working accountants, welcome to my Smart Tally Prime YouTube channel. In the last two videos, we were discussing about the tax liability of real estate sector under GST. So for that, I will share the screen. For that, the total real estate sector, all the real estate projects are divided into four types. Any project will fall within these four. Number one is the builder purchase the land and construct the flats for selling. So you will purchase the land, then construct the flats, and you will sell the flats to the public, to the customers. This is one. And second one will keep it as it. And the third one is the second one is the builder and the landowner, landlord is also called landowner, they enter into an agreement called JDA, Joint Development Agreement, so that in that the landowner transfers a right to the builder to develop the plot. That is for the construction called as TDR, transfer of development right. So they will enter an agreement, joint development agreement, and so that this landowner transfers the right of the development. That's called development right. He will transfer to the builder, and the builder will construct the building, the flats, and both will share in the agreed ratio. So 40-60, like that agreed ratio, they will share the flats. This is very, very important. This will take, it will be very confusing and it will take long time. So this you will make it, we are making now. So previously we completed this, and the third one is works contractor. That is the contractor, I mean the builder, he will not purchase the land, the landowner will not sell the land, just he will ask the builder to construct a house on his plan. So the land is held by the owner, and the buildings constructed are also held by the owner. That is the owner, landowner is the owner of the land as well as the flats or buildings constructed on that. The works contract is called works contract. The builder will provide only construction service by bearing all the expenses. That is labor expenses as well as material expenses. Everything will be met by the contract, that is the builder. The land for a fixed price. This is called as works contractor. And the other one is, so we have to discuss it. And for this first one, we made one video. For these two, we made the second video. Now we are going to make this. In this, we will make two videos because in one video, it will take long time. It is very, we have to understand well. That's why we are making two videos. So the fourth one, these two combined, we made a video. The fourth one, labor contractor means if the contract, I mean the landowner use the work, that is like works contract for the material as well as labor, the builder may use inferior quality of the material. That's why this landowner will say, I will supply the material. You give the list, I will supply the material. You only provide the labor and complete the work. That is for the construction. We provide labor, all types of labor, plumbers, and everything. So total work you complete, except the material I will supply. So in this case, this is called as labor contractor. The builder is called as labor contractor who only supplies labor. In this case, the material cost is incurred by the owner only. So under this, what is the provision? So these two, I made a video, this I will do. This one we are going to discuss elaborately. We must be very careful to, and in every case, everything from first video, second video, now third and fourth, all the videos, every video view the videos from the beginning till the end, and also one by one. First one, next number two, next number three, number two. If you see in the middle, you cannot understand. So we are discussing about this one. So in this case, they will enter into joint agreement, and then you will give the right TDR, and the builder will construct the flats, and both will share. And the landowner, he will sell his share of flats, and the builder, he will sell his share of lands. So this is the thing. So that we will enter now. So it is called as TDR and tax liability. So what is this TDR means? JDA. Under JDA, transfer of development rights, that is development right, is transferred to the builder. So this is the thing. And what is the tax liability? So in this case, you must be very careful. So in this case, just like this, all the real estate projects are divided into four. And in this case, the work done, that is the work procedure, how the procedure will follow. So first what the builder will do, builder, then the contractor, that is the builder, first one landowner, then builder will sell to the customers. Customer is the last one. So in this case, there are supplies, all these are supplies. So these supplies under this one, this under JDA, these are divided into three supplies. First, he will give the building, development right, he will give landowner. Then the builder will construct the flats and both will be shared by both the landowner and the builder. And then the landowner will sell his share and the builder will sell his share of the flats. So that's why there are three supplies. So I am dividing this into three supplies and all these given, all the map liabilities and everything given here, all these are discussed according to the notifications issued by the GST department. So nothing is our own, this one. So everything is as per the notifications issued by the department, by the government. Okay. So first one is supply one. What is the supply one? What is the supply two? What is the supply two? So for these first two, we will make a video now. For supply three and others, we will make the video in the next part. So first one, supply one means the landowner will give the development right to the builder. Transfer of, they will enter into agreement and they will give transfer of development right. So transfer of development right, he will give. So here, landowner is giving the development right to the builder. So landowner is the supplier, he is supplying the service. And this actual TDR means it is an intangible asset. Intangible asset is transferred to him. Okay, so the intangible asset under GST, intangible asset is called as service. Intangible asset is treated as service. So he is transferring the service to the builder. He is the supplier and the builder is the recipient. So that total 100 flats will be constructed. That is the contract. The contract between these two is 100 flats. Constructing 100 flats. That is the right. That is to construct 100 flats is giving the TDR to the builder, 100 flats. And then in that, the both will share. Builder will take 60 flats and builder will take 60 flats. Builder will take 60 flats. Builder will take 60 flats and the buyer and then the landowner will get 40 shares. They are sharing as 40, 60. Landowner 40 and builder 60. For example, I am telling 100, maybe 100, 200, 300, 400 also. I am taking example of 100. So in this case, you see, here the contract is 100 flats are to be constructed and 40 will be given to the landowner and 60 will be given to the landlord, builder. See, this one is giving and 40 and 60 there. Total 100. 40 to the landowner and 60 to the divider, builder. And here, how they sell, that is, you will take up later. This is the contract and this is the thing. And here, he is the landowner is the supplier, builder is the recipient. For this, he is constructing the buildings, that is giving construction service. So this is also a service. The construction service is giving and is giving the flats. So builder is the supplier and landowner is the recipient. So he is giving, where builder is receiving. Here builder is giving and landowner is receiving. This is so here, but here you see, the builder is not receiving any monetary benefit. And here also is giving service flats, not giving any monetary. Money is not receiving. In this case, they may ask you, in the case of this one, why the builder will pay? Why the landowner will pay? And also, the builder may say, I am not receiving any monetary benefit from the supply, from the landowner. Then why should I pay this one? For this purpose, there is one here. This TDR, why should I pay tax? Here, it will be regarded as supply because you see, in 2019, the government issued a clarification, frequently asked questions on the real estate. In that, number 39 is related to the TDR. Number 30, So in that, this one, only the things which are applicable to us, they are taken separately in this number 10. Number 10, see here, when the development right is individual promoter, whether this same, that is development right, transfer of development right, will fall within the scope of supply. If it is supply, then tax is payable. So answer is, business includes all this: profession, manufacture, vacation is extra income, is extra business or side income, side business. This also included in the business. That is why the irrespective of the Allah, the activity of transfer of, therefore, the activity of transfer of development right by a landowner to a promoter is a supply of service subject to GST. So it is a, see here, this is a what you call intangible asset is transferred. So supply of this one is treated as supply because it is treated as service. That is why this is treated as a supply, shall be recorded as supply. So in this case, when he is giving this one, this is treated as a supply, means the tax is payable. So when the tax is payable, and keep it like that. And here he will give the 40 flats to the landowner, and the remaining 60 will take. When he's giving the 44 flats, he has to pay the tax. Why should he pay? Because I will tell you an example. See, there is one auditor and lawyer. Here, he is giving the right and he is giving the flats. No monetary benefit, money. Here, see, for example, there is one CA and one lawyer. CA will give audit service to the lawyer. So the CA has to pay tax on that. That is paid to the government. And lawyer, what he is not paying money, he is giving some, say there is some case, case to the auditor, the chartered accountant. The lawyer is taking up that case and is giving the legal service without charging money. Here, CA is not paying the tax. He is giving the audit service. Lawyer is giving the money. In this case, both say, I have not received, they both are not receiving any monetary benefit, but both are receiving, what are they? Both are exchanging the service. Both are exchanging the service. That is why in this case, so he has to pay for this audit fees. Lawyer has to pay legal services, but both are not receiving any monetary benefit. In such a case, how to pay? In this case, how to pay the tax? In this case, rule number 27 says OMV means open market value. So it is to be taken on the open market value, the tax at the rate. That is, it is, for example, 18% on the services, 18% tax is to be paid. What is the open market value means? So the fees collected by the auditor or the lawyer, if the service is given to outsiders, that is open market. In the open market, what is the fee you charge you for this? Is the open market value. On that value, the C has to pay for the audit services. And so even though they are not getting any benefit from others, each other, monetary benefit. So exchange of service means these services are to be valued at open market value, and both have to pay. Audit fees, CA has to pay as well as lawyer has to pay, and the legal services, whether it is forward charge or reverse charge, that's different. But both they have to pay tax. That is why similarly here, in this case also, here, he is giving only right. That is, giving DI right. He is giving the construction service. That we are not getting service means flats. Not, both are not getting any monetary from each other. Because you will say, I'm not getting anything, I'm not giving the flats, but I'm not getting any monetary benefit from the supplier, from the landowner, he may say. But he is getting, what he is getting? He is getting the right for the construction of the flats. That is why this is regarded as supply, this is regarded. So in this case, both on this TDR, landowner has to pay, on the construction service, that is, this is also supply of service by builder to landowner. This is also supply of service. This is also treated as supply. This is also supply of service by the builder to the landowner, by the landowner to the builder. So in this case, both have, in this case, both have to pay tax, like auditor and CA and lawyer, both have to pay. But what is done is here. So this is only a construction service, construction of flats. What is given in the GST means in the notification 4/2019. Notification 4/2019. So this is a tax. I mean, still as supply. In that case, the landowner must get a registration under the GST Act. He has to get registration under the GST Act. He has to get registration. Actually, that is the provision. But here, this TDR, transfer of development right, is given as exempt supply. This supply is exempt under this notification 4/2019. It is treated as supply, is treated as supply that is included in the business. It is liable to GST. According to that, he has to take the registration. But he has to take the registration, this is supply. But as per this exemption list, notification 4, it is exempted, means no GST is payable. So when the no GST is payable, so there is no need for registration. So he will not get the registration, is not required. Actually, registration is required for the supply, but it is exempted. That's why no GST is paid. So registration is not required. But builder has to, definitely he has to register. In this case, so it is not complete. Still there is there. He has to get registration. In other cases, we will come to it later. For this TDR, no GST is payable. So for the time being, for this TDR, this builder, landowner, need not have GST registration. But here he is a land builder. He is giving that and he will do everything. So in this case, he will purchase what we call material and all these things. For this, he must be a registered person. He must be registered. So here, it is a supply service or service by the landowner, and he is giving 40 flats to them, supplying the construction service. But for the 40 flats, what is the value to be taken here? Value of supply. This is supply. Here is the supply, so it is exempt, no problem. It is a supply to the by the builder to the landowner. But what is the value to be taken for the flats? In this case, the value of service is equal SD, stamp duty value of flats constructed by builder to the landlord. So constructed and given to the builder given to the constructed by builder and given to the landlord 40 flats. On the 40 flats, stamp duty value. So stamp duty value is to be taken as the value of the service. So stamp duty value means the government value under which this flats will be registered. Registration value, or simply it is called as stamp duty value. So in the previously we understood as per 11/2017 that any building, commercial or residential, the stamp duty value, the value includes 1/3 land value also. Land value also, it includes land value also. So stamp duty value, that is government value, means it includes land value also. So what is the land value as per 11/2017? 1/3 is the land value. So in this case, in the rate, that 1/3 is to be reduced. So on this one, this is the value of the supply. Okay. And on that, how much he has to pay tax? He has to pay, payable by landowner, it will come later. The rate will be 5%, 1%, 12%. Commercial 12%, affordable house 1%, non-affordable 5%. After 1/3, reducing 1/3 land value. That is the value. That is the rate. Okay. And in this case, he is giving 40 flats to the landowner. He has to pay the tax, GST on the flats, whether these flats are sold by the landowner or not. Even during construction, it is the value. Flats are sold during construction, or they are sold after completing construction, or they are not sold or not sold. Whenever it is sold, in respect to that, the landowner has to pay. So he is not paid. GST is to be paid irrespective of the sale of flat by the landowner to his customers. The sale of flats by the landowner is immaterial. So the builder has to pay irrespective of the sale by the landowner. He has to pay the tax. But in this case, okay. So this is about this one, and he has to pay. But here now we will come to the main point here. So keep him aside. Keep landowner. Builder aside. In the landowner, I said is a TDR is a supply, but is exempt supply. No GST is there. That's why registration is not required. But see here out of these flats may be sold by the they will be sold by the landowner. So, you know, in the beginning, we understood, if the flats are sold, all the flats are sold completely, are sold after the completion of the construction only. After the completion of construction, GST is exempted. So no tax is payable by the landowner. Even if they sold, tax is exempted. But tax is paid by the tax on all the 40 flats is paid, which to be paid by the builder, which is to be paid by the lender. So the builder may pay the tax from on his own, from his pocket he may pay the tax, or he may collect from the landowner. He may collect from the landowner, or he may pay on his own. It is immaterial. We are not bothered. He has to pay the tax. And in this case, he is selling means he is also liable to pay. He is selling, if he not selling, after the completion only he is selling means he is not paid. Tax is not to be paid. What it does? The landowner, if he sells any number, at least one, if he sells flats during the construction period, then he is liable to pay. After completing construction, no tax. But if the flats are sold during the construction, the seller means the here landlord is liable to pay that tax. So in this case, for example, we are taking the example as, see here, the landowner got fought. So 30 flats he is stealing during the construction process, 10 flats after the construction. Okay, and in this case, the builder, from his share, this we will take up in the next video. That is the supply number 3 that we will take up. This supply number 1 and the supply number 2 actually giving the flat. This supply number 2 is related to this. Supply number 3, this is actually supply number 3. So we will take up later. So this into supply number 1 and 2. In this case, here, supply number 1 and 2. He is supplying the TDR and the builder is giving the flats. So 1 and 2. So this is 1 and 2. This is 1 and 2. And this is supply number 3. So this we will take later. Okay. And here, look, here. So how this supplier, the landowner, he is selling 30 flats during construction. In such a case, he has to pay the tax. It is taxable at the same rates. We know the rates. What are the rates? Rates are 5%, 1%, 12%, isn't it? 5%, 1%, 12%. He has to pay. Here, in this case, if he sells 30 flats during the construction process, he has to pay the tax. Pay in the sense, he has generally they will collect from the customers. From the customers, he has to collect the tax and pay to the government, isn't it? He has to pay tax. That is, he is liable to pay the tax. That is why in the beginning for TDR is not taxable, exempted, no registration is required. After getting the flats, if he sells the flats during construction, then he is liable to pay tax. Then registration is required. If he sells all the flats, no flat is sold during construction process, means all the flats sold only after construction, no tax is paid, they're exempt, so no registration is required. So here also no registration required, and when the flats are sold after construction, no registration required. So all the GST on all the 40 flats will be paid by the builder. But here he is selling for 30 flats during construction. In such a case, he has to pay the tax. That is, he will collect from the customer and he will pay the tax. So in this case, his registration is required. So he has to get the registration, isn't it? Previously, no required, not required. But here, on all are sold after construction, no registration is required, no tax. But here, the tax is payable by him since he is selling during construction. That is why he has to get the registration. Who? The landowner also has to get the registration. So, okay, in this case, he is selling and he will collect the tax. And if he pays the tax on the 30, but irrespective of his whether sold or not by the landowner, the builder has to pay the GST on all the 40 flats he has to pay. After the construction, he has to pay. But if he pays on 30 flats, if he pays on 40 flats, okay, so the taxation will be double taxation, isn't it? Double taxation on the same flats, he is paying and he is paying. That is why to avoid the double taxation, as per the notifications only, notification 3 by 2019, notification 3 by 2019, there is one facility is given to avoid the double taxation. Only one person will pay the tax, only the builder. I told you in the beginning, the builder has to pay the GST on all the 40 flats, whether he pays from his pocket or collect from the landowner, it is immaterial, he has to pay. Okay. Now, here what to do is here, irrespective of well, when it is sold, if the landowner sells during the construction period, that means he is collecting from the, he is selling the flats during the construction period. In this case, for example, he is selling 30 flats. For example, you take it as for each flat 40 lakhs. So at the rate of 40 lakhs, 30 flats are sold. 30 into 40 means 12 crores. So in that, the tax rate, it may be 1% or 5% or 12%. You take it as simply 1%, affordable houses, 1%. So in this case, 40 lakhs into 30 flats will be 12 crores. And in that 1% means 12 lakhs. So 12 lakhs he has to collect from the, sold landowner selling 40 during construction, no registration, during, not during, after construction. After construction, after connection, there is, after construction, there is no tax. So total GST will be paid by the builder. He has to pay, no registration required, no tax is paid, only after it is paid. Suppose if the flats are paid during construction, registration is required, and the tax is to be collected from the customers. But actually, actual practice, when you collect, you will pay to the government. But here, to avoid double taxation, he has to pay, the builder has to pay, whether from his pocket or collecting from the builder, landowner also. So in this case, what he will do, the landowner, he will collect from the customers, and that amount will be paid. That amount will be paid to the builder. And that amount will be paid to the builder without paying to the government directly. He will pay to the builder, and builder will pay to the government. So builder's liability, he has to pay. He is paying. But here, instead of this, he is paying. So builder has to pay that. So that means the landowner will collect from the customer directly. Don't pay directly to the government. Pay to the builder. So builder means, so builder what he will do? He will pay to the government. How he will pay? First, he will show the liability. GSTR1 he will file. In the GSTR1, B2B. So he is collecting the money from the builder. Builder is selling, his registration is done. So, not builder, landowner. Landowner registration is done. So he has to show the liability in GSTR1. He has to show it as B2B, business to business is registered, and landowner is also registered. B2B, and the landowner GST number will be given. So on the GST number of landowner, he will show the liability because he is collecting from the landowner, isn't it? So he has to show in the B2B in GSTR1 with the landowner GST number. And then in GSTR3B, that amount will be paid to the government. This is given in the, can be done in the notification 3 by 2019. So here, what the builder is doing, taking the money, the issuing as liability to the liability as B2B, and giving the GST number of the landowner, which is getting the money from landowner, and in GSTR3B. So once the liability is declared in GSTR1, and in GSTR, this is only liability, declaring the liability in GSTR1. GSTR3B, we will make the payment. So the amount is paid to the government. But here, he collected from the customer. He is liable to pay to the government now. But what he will do is, he paid to the builder that he uploaded in GSTR1, he showed the liability. That is just like selling. And in 3B, he paid the money. That is why from GSTR 1 of the builder, GSTR 1, this landowner will get the ITC, he will show in 2B. In 2B, in the land, the other person, that is the supplier, if we upload the GSTR 1, so with our number is there, it's our number. So in this number, we will get in 2B, we will get the, in 2B, we will get the ITC we will get. But here, I am also liable now. I collected from the customer. So the landowner, he will file the GSTR 1 and he will show the liability. The aspects he is selling to the customers. So if the customer is registered, he will show B2B, and the customer is not registered, ordinary individuals, he will show. So B2B and B2C. If all the customers are individuals, so we know registered persons. So in B2C, he will show the liability of all the 30 flats he sold. So he's showing the liability, so he has to pay. But in GSTR 3B, from landowner, so landowner filed GSTR 1, from the GSTR 1 is getting the same thing in GSTR 2B as ITC. So in 3B, so the liability is set off against this 2B. 2B means against the ITC. This ITC is set off against the liability. In such a case, payment will be 0. And that's all. No, understand. So he is paying and he is showing that he is giving the GST because the landowner is paying money to him. So he is uploading showing the liability in GSTR 1 with the GST number of the landowner. So landowner will get the same amount, that is ITC in 2B. The 2B means we can claim ITC. So that ITC will be claimed and he is selling to the party customers. So he's showing the liability with their number, otherwise B2C. And that liability is adjusted against the ITC available in 2B. That ITC received from the land and the builder, already he paid the money. So this is the, so that is set off. So as eligible, same thing, this eligible against the notification. According to the notification, 3/2019, the payment will be 0. That is the payment will be 0. So he met his liability and the amount is paid to him. So he need not pay because liability is there. He got the ITC from the builder since he is paying the money. So his liability is gone. And he is already paying. He is paying the GST on the 30 flats. So he gave 40 flats. 30 flats he is giving. 30 flats. 30 flats, he is paying the GST. He is giving the tax and paying to the government because he sold during the construction process. And so this builder also taking the money from the landowner. He is also paying the GST during the construction phase. What about the balance then? So for the balance then, the seller is selling the 10 balance after the construction. So that is exempted and the landowner need not pay any tax. But he is liable for the 10. All the party is liable, but 30 he is paying, taking from him money from him, and after completion for the 10 he has to pay the tax. So he has to file the GSTR 1 under as taking the liability as B2C because there is he's not receiving the money from anywhere. So he's showing as B2C, but others cannot claim ITC. So B2C, showing that B2C, he has to file GSTR 1, that amount is to be paid in GSTR 3B. So for 10 flats only, he is paying from his pocket as B2C in GSTR 1 after completion. During the process, construction process, since the landowner sold 30 flats, that money is paid to the builder, and the builder is paying as liability, showing the GST number of the landlord or landowner, so that the landowner will show the liability in GSTR 1, and in GSTR 2B from the builder, he is getting the ITC in 2B, and that IC set off against the liability. So he need not pay anything, and he is paying 30,000, 30 flats. He is paying for 30 flats, taking money from him. His liability is also completed, but balance 10 flats, he is selling after construction. He need not pay any tax, but he has the liability. Whether he is sold or not, he is liable. But 30 sold during construction, paid the money to him, he paid the government, and he landowner got the ITC completed. But the balance 10, he is liable because 31 he paid. So after completion, for the 10 flats, he will show the liability in GSTR1 as B2C. He's not selling to anyone. So he's going to taking the liability as B2C, and in GSTR3B, he will pay the tax. So for all the 40, the tax liability of the builder is completed. Okay. So in this case, everything is over. So if the landowner does not sell any flat during construction, he sells all the flats after construction, there is no tax liability. Okay. And for when he is selling the landowner is selling during the construction, the owner should get the registration because he is liable to pay the GST. And the rate is 5%, 1% mandate, and he will get back the ITC from the builder on construction service because he is paying to the builder. Builder will pay the amount, will show the liability with the landowner GST number. So landowner will get the ITC, but from landowner, builder will not get ITC. But from builder, because he is giving the money to him, he is paying. That is why he will get, landowner will get the ITC, but builder will not get any ITC. Only for this, and for the commercial products, commercial thing, he will get the ITC. Okay. So this is about the supply 1 and 2. This is video number 3. Okay. And after that, the second step is supply number 3. So supplier got 60 flats. From his share of flats, he will sell to the customers. He will sell to the customers. He may sell all, or he may not sell during construction, or he may sell after construction, some of them. And these things will be like that, which we will take up later. So this is some other part is there here. Some other part. This some other part is related to the supply number 3. So supply number 3, and in the TDR also there is some part. So as per the step 3, that is supply 3, there is some liability here also that we will take up in the next video. So if you can't understand, in this case, this TDR and tax liability is very confusing. So please go through the videos more than once. Go through the videos very well, many times, then only you can understand. And in the case of all the real estate projects, all the videos, see from the beginning of every video. That is, from the first video, you check. Suppose if you see in the middle, second or third, you can understand. From the beginning, you see all the videos, every video fully, and you see many times, then only you will understand. This is about the TDR and the tax liability. For the 2 supplies we completed, the third supply, in the third supply is selling. Some flats will be unsold. What about that liability? Thus we will take up in the next video. So please watch the video till the end, every video. And if the video is good, like the video. And please, everyone visiting my channel, please subscribe my channel, select what to call it, click the bell icon and select all. You will get notification for all the videos which I upload. Okay. And also I am taking up paid online classes. If anyone is interested, my mobile number is available on the thumbnail. You can contact me and join only online classes, and they are paid classes. Okay. And I wish you all the rest. We will meet in the next video, real estate part number 4. This is third, and part number 4 we will get that. And thank you.